What's going on, everybody? 360 Digital Closing Bell here, episode number 45 on this gorgeous, but not normally, Tuesday, September 8th, 2020. I am your humble correspondent, Michael Tanner, joined as always by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. Stu, how you doing this morning?
It's a beautiful day in the neighborhood. We got a busy week.
We do have a really busy week. How was Happy Labor Day, first off, to everybody's tuning into the show? Stu, did you have a good Labor Day?
I sure did. My kids came in and had a great time not working for one of the rare times in our...
I know it was odd. I couldn't get a hold of you. Did you end up doing that interview yesterday, by the way? I've been meaning to ask you. Did you sneak in a Labor Day work interview?
I did, as a matter of fact. And Scott Lapierre with Shale
Specialist.
Boy, it was a education. That was part two. You have part one to cut up, and I mean, there is some great tidbits in this two-part episode.
No, that's a great interview, guys. But we all hope you have a great Labor Day weekend. We have a great show for you lined up here. Episode number 45. Currently, this show is a middle-aged person, which is nice. Oil's trading 37.31. Oof, not good. Waking up. I mean, now it's currently nosedive. We're 6.5% down, or about $2.50 from the overnight. So we'll obviously talk about that. Talk about some California blackout stuff. Stu's got some stuff in the international news. Yes, we'll look at the levels for crude oil of the week. I don't know. The levels are going to be wild this week. And then we'll check in with the commitment to traders. But first, guys, this show is brought to us by the world's greatest website, oilandgas360.com, where you can stay up to date on all of not just your energy finance news, but all of your just energy market news, guys. I highly recommend checking out. Check out the 360 News Desk, which is a page that means to. It's the place to go to find out all you need to know about energy equities, energy finance. We keep everything, all of these podcasts, our live show that we do every day, which breaks down each individual trading session every day. We took yesterday off, so I'm fired up. A lot to talk about on the day's show, but we've got charts, we've got equity overview tables, we've got so much stuff, guys. Highly recommend checking all of that out. There's also the podcast, the Energy 360 podcast, which is on Oil and Gas 360. That is a podcast that Stu runs. Speaking of Scott Lapierre and Shale Specialist, he's going to be on that one. What else do you have lined up on that podcast?
It's actually kind of cool. We have some experts in battery recycling coming up on Wednesday. We have one of the main folks for LNG out of Europe. He is a spokesperson, and it's going to be really interesting. Rudolph, he is very active on LinkedIn. Really excited to interview him as well, too. And we have the Women in Energy kicking off.
Yes.
Very excited about the women in energy. We've got some other big names coming around the corner.
No, you've got a lot of stuff lined up on that. I got to be in the office tomorrow to get the first Women in Energy cut, so we're excited to announce whenever we can. We'll get that cut, then we like to announce that way. But, guys, you can check that out, Energy 360, wherever you get your podcast, Apple, iTunes, or YouTube. You should also just subscribe to this show, the world's greatest podcast, 360 Digital Closing Bell. You can find us on the Oil and Gas Show. We appreciate everybody who has listened to us on there. Don't worry, we haven't forgotten about you. We really appreciate everybody who has listened. You can email the show, mtanner@enercominc.com. I answer all of your questions. I mean, it's sad, Stu, $37. We're talking a 30 handle coming into September, because if you've been following the show, one of the things we've been bracing for, and I think the oil industry is bracing for, is September RBL redetermination. And that has a lot to do with what the current price of oil is. Right now, SEC strip is trading. The SEC strip price, which is not what oil is currently trading, is like $55, which is kind of funny to think about, that you're setting loans based off 55 oil when I couldn't, but whatever. Hey, it's how it works. It's how the industry's always worked. A lot of the times it helps. It helps banks, because oil is generally above what the SEC strip pricing is, because it's a lagging index. And so generally when prices go up, banks, and so that's, but in this case, it's not. And every September, banks tend to do this. Not tend to, they're required to. They tend to go, okay, well, we've given you a credit, we've given you RBL loan of $500 million based upon $55 oil. Well, now oil is currently trading at $37. My guess is those get moved down $10 to $45. I think that's what the kind of the tranche is going to be, because they're going to generally stick to SEC pricing, and SEC pricing, if you do the math, it'll probably end up somewhere like $45 when you do the math, because it's a 6 to 12 month rolling index of the lagging. So hasn't quite caught this huge dip. I mean, it's going to be weird. Imagine if oil's $100 in December, or imagine if oil's $100 in February, but SEC pricing's $30. It'll just be a pretty wild. It'll really kind of bring into light a lot of other issues with sort of the way this is being, but it's the way the system works. So we're not going to try to dismantle the system on this show.
But we've also never seen negative pricing before. So what the hell?
Exactly. Now, I don't think that's really going to take into account, because if you know the contract that it rolled into ended at like $17. So really, if you want to look at what the floor was, it's like $17. That negative was we've been over this too many days. It's the structure of the way that financial contract was set. So 37, a 30 handle on oil is never good for an RBL redetermination, because while they might use SEC pricing, they also just might get more strict. You might just see we're just not, because you could do whatever you want as a bank. You're lending them money. You can really set whatever terms that you want. Now, there are specific terms, and you talk to guys, you talk to our friends at Haynes and Boone, and they'll tell you there are standard contracts. But really, you could, I say this in quotes, for those on the podcast, customize them as much as your counterparty is willing to negotiate with you. That's, anyone's willing to make a deal as long as you have a counterparty. Really, so it's going to be very interesting. And I know for small stripper operators, this doesn't look good. I think who this hurts, I think specifically on these redeterminations, I would call them the small operators, stripper operators, guys who are running maybe less than 75 wells on their own field, guys who are, a lot of it's just cash in versus cash out. That's what they're spending. There's no, and then maybe they have a little bit of a loan on the side, but this is what these guys are going to hurt, because their access to capital on a daily basis gets hurt. And that's really where, if you're a small operator, where loans come into handy. It's not, you can probably balance your books at the end of the month, because that's generally when a lot of these marketing companies pay up. They run up a tab, boom, they pay up. Well, you need cash to run your day-to-day operations. I'd highly recommend watching the movie Too Big to Fail. Whatever you think of the politics behind it, at one point the GM, the CEO of General Motors General Electric had to call up the call up the Treasury Secretary. It was like, yo, what's going on here? I don't think I'm going to have cash to run my day-to-day operations. This is GE. So, yeah, exactly. So there's the concept of, at some point, you need companies to be able to have cash to run day-to-day operations, pay their employees, so that whenever the invoices get paid or marketing companies pay, and that's where these loans come in, specifically for the smaller operators. They're not using these loans necessarily to expand. They're not spending it on CapEx. They're spending it on OpEx and G&A. Whereas these bigger companies, when you get into you get into the independent shale, some of these folks, they're using these loans on capital expenditures, which is where you drive up debt and where RBL redeterminations really come into place. When we look at, so that's where I think smaller operators are going to get hurt, especially with the 30 handle on oil right now. I mean, $37. I think the other people that are going to get hurt, I think this is going to hurt. There's a subset of companies that are, and I think we all know who they are, that are on the brink of bankruptcy anyway, that this redetermination doesn't help. I mean, we don't need to be calling out names quite yet, because I still want to continue the research, but I mean, we can all think of 3 or 4 companies that are already drawn on their RBL. So when this redetermination happens, they're going to be overdrawn, which doesn't necessarily shut you down. But now all of a sudden, you're in a tight pickle here, because the bank wants to figure, okay, you're not only do you not have more money to use, you're now over. You're now having to figure out, where do I come up with? And so, do we see a lot of senior note offerings? And this is where, if you talk to the team over at Entercom, they might tell you this is where you could start seeing really, really good deals on an investor side. And, if you're talking about a cheap time to buy oil and gas stocks, it's cheap now. Now, the question is, will they be cheaper in the future or more expensive? And I don't know. I don't know the answer to that question. I think a lot of it depends on what happens with the price of oil. And we're in a 7-month global crude oil inventory build, Stu,
Oh
and
yeah.
that depresses prices. That's just the first thing they teach in Econ 101. When the supply goes up, price goes down. We're just in a global build, and we have been, and we probably will be through December. So I'll let you have it. I've been ranting for enough here.
Well, I think it's going to be even more than that. You sit back and take a look at not only supply and demand. It's You're going to see that our Noble and Chevron deal is the kickoff of the M&A season.
Yep.
And it's also going to be a very large increase for royalty companies as well as some others. So there's going to be some good, take a look at Liberty and Schlumberger. There is some fantastic ways to make money coming up.
Oh yeah, I think from a, I think there are always going to be, and yeah, and I don't know what the future is, Stu. I think that's a good deal in the incident. If I had $100 million, am I pouring it all into energy? I don't know. I don't know if I can say that's something I can't say 100% because oil E&P stocks move with the price of oil. Do that on your own terms. Go oil price, XOP contract, 20 years. Just the same thing. It's basically the same thing. And you can also break down crude inventory. You can overlay global crude oil inventory stocks and overlay price of oil, and it's inverse. When we build, price drops. When we draw, price increases. Why? Well, the supply is changing, and so that changes the price. So this is not a good number to see 37.30, and we continue to tumble. We're bouncing off 37.06, which, remember, we had that line 4 months. This is where using a charting software for the same and continue to use it. We've got a level of 37.81 and a level of 37.06, and it's playing off it very nicely. And we set that from what? Like 2 months ago. I'll have to go back and look, but I'm just seeing blue lines that I've drawn. So this is where having daily charts and keeping them updated comes into contact, because when we go over the levels, we've already on. But my point is $37, it's, as we move into this redetermination, it's not going to impact it fully. I think it's going to move that SEC pricing down to like $45. But our friends at Netherlands Sewell will be able to answer that question better than I can. So talk to them. They'll know. They're experts in that. I'm doing, as I always say, we do napkin math on this podcast. All math is done on napkins.
So you can throw them away.
Exactly. So here we go. I guess, that's really all I've got do I think oil is going to continue to tumble? That's smarter people to answer that question. But what I'm saying is, it makes sense why it could continue to fall. There's a lot of bearish pressures on the price of oil right now. Rising global inventories. We're moving into winter, which is generally more of a natural gas season. We have huge natural gas stocks, and it'd be very interesting. I think a lot of people, I think you saw a lot of people thought crude oil would be $55-$60 come January. I don't know about that. Now, all it takes is a vaccine and a global war, and we have $95 oil, and you've got 65 SPACs coming out of nowhere trying to get in on oil and gas. So, I think from that vantage point, it's that. We got to move on to ICE California and these blackouts. Stupid. I'm gonna let you get one last word in here. What do you got for us?
Well, on what we were talking about, I think that let's say there's no disasters, no wars, no nothing. There's too many experts out there saying that it's not going to recover up over the 40 to 50 range till the end of 2021. And I would almost agree with that. I don't have a crystal ball. There's a lot of other guys out there with the crystal ball saying it ain't going to recover until the last half of 2021.
Yeah, and that's why I don't get paid the big bucks to make those decisions. That's why there are people at Rystad, S&P Global, those guys, they get paid the big bucks to make those calls. I don't. But I see a lot more bearish data than I do bullish data, and I wouldn't be shocked if – I mean, it's called the September swoon for a reason. I mean, they literally call it a September swoon for a reason. So, I think the other thing that came in that really this weekend news-wise came heavily was these blackouts that are happening in California. And if first of all, we have anybody who's listening to the podcast that's in California experiencing blackouts, like that sucks. I'm sorry. Like we might laugh because it's California and that's what you get. Maybe, but it does suck. And it's not a decision that the individual citizens made as individual. This is politics at its finest. And Stu, I want give everybody an overview of kind of just what's going on before we kind of dive into the specifics.
Well, a 50,000 foot overview is that California, a little while, they've had Michael, I believe you looked it up before the show, and I think it's 30% ballparkish percent of their energy is
33%.
33% is renewable energy. What happens when the wind goes down, the sun goes down, you don't have power to back it up. So part of the problem is they've poorly designed the power distribution, not the grid. The grid they're blaming in grid management, but it's actually the constant source of power. Grids do not do well with influx, influx and deflux of power. They just don't do well. So California has been tearing down their natural gas, their coal plants, everything else. If they did it in a balanced power, they have one of their nuclear reactors that is good for, I believe, another 5 years. They're planning on shutting it off in 2021. That's about the best, cleanest, most cost affordable to the end user kilowatt per hour when it's mixed together. I'm not against renewables. I am for the lowest kilowatt per hour in taking care of good stewards as our for our world and all that. But you can't be stupid about it. You can discriminate based on stupidity, and that's exactly what's going on.
You can definitely discriminate upon that. And no, I think it's really sad. So you mentioned something. 33% of electricity has to come from renewables. That's what they maintain. So to give you an idea, on September 6th, they had peak load generation 44.52 gigawatts. This is gigawatts, guys. Gigawatts. So 1,000. 44,000 megawatts. Watts.
Yeah.
This is gigawatts, baby. Woo! So to give you an idea, 14.7 gigawatts has to come from renewables. So let's look at this. How much does a solar panel produce? About 5. So average solar panels 300 watts. Okay, or 0.3 kilowatts, or 0.00003 gigawatts. Oh, this should be good. So now let's give you guys, no, even worse than that. Give you an idea. Here's my electrical bill. I pulled it up. In 1 month, here's what I'm using in Colorado: 526 kilowatts per hour. So that's my usage. That's my usage. So to give you an idea, that's like 6,000 solar panels running 24/7 just to get my house for a month. You can't do that. And now they're saying 33% of California needs to have all of their generation needs to come from that. 14.7 per hour, baby. That's humming. And as you mentioned this, when things get hotter, the wind dies down and the sun sets earlier. It's hilarious. People think that when it gets hotter, there's more solar available. Not really, actually. There's a sweet spot, and if you Google, there's like a sweet spot between I'm looking at it right now, there's a sweet spot between 75 degrees and 90 degrees where it's the best. When you get over 100 degrees, it almost is like burning. It just starts burning things. So it's, we interviewed Alex Epstein on the podcast, on the Energy 360 podcast, and he has a great thread on it. I'd recommend going to energytalkingpoints.com to learn more about it. He's got a great thread. Really, he blames the mini new Green Deal, which that happened in California, which got him up to 33%. And then his argument is expand this out. This is what a new Green Deal would look like for the entire country.
Yep.
And
he's right.
It's probably why it's not going to happen, because I doubt anything similar to this passes, because I think people just know about it. Like I think California, I think at least the politicians, they're getting a class. They're getting a nice, good lesson. And sometimes we talk about this in economics all the time. Sometimes there's this concept of learning by doing. Sometimes you just have to make the mistake and well, I guess we can't have all renewables. So it'll be very interesting to see how they pivot off of this.
It's like having a child that keeps trying to stick their finger into the light socket. You just have to let them do it after a while.
We're shutting this podcast down in 3 minutes to conserve electricity in solidarity with our California brethren. Is that legal?
Well, why don't you have a moment of silence like you normally do for folks that go bankrupt?
They're not bankrupt yet. They're just without electricity. So I think we should just shut the lights off real quick. We should black out real quick in solidarity. But I think with that, guys, it's time to go ahead and just move in to crude oil and the levels for the week. As always, this segment is sponsored by Sandstone Capital Group. These guys do great work. SandstoneCG.com, 949-561-1818. Call them. Tell them the podcast sent you. They really appreciate it. As we've just been talking about for 20 minutes, oil's at a 30 handle, 37.24 to be exact. It's down about 6.5% based on the overnight open. In terms of the levels, like I said, you got to go back. To give you an idea, let's go back to the last time these levels. Last time we saw $37, keep rolling, we're talking June 24th is when that level was hit. So now that's when we're moving back to. That's just give you an idea. That's what we're moving back to June 24th. These are levels from June 24th. Okay, so really 37.80 or 38.72 is a good level on the upside. 37.81, 37.06. There's a level from June 18th, 35.35. Really in between 37.06 and 35.35. That's so it's $1.40 swing. I don't know. It's kind of a wet zone right there. Like I said, I'm on the bear side of everything though. So if you're going to get in and trade this market, order flow. Do not be trading price action right now. You have no idea what's going on. Because at this point you're just trying to ride waves. Inventories come out Wednesday. Be interesting to see what happens. It's going to have. I think it's going to have some draws, just because we saw about 1 million barrels come off for the week. We saw 9 last. But remember, we're in global crude oil builds, so whatever happens domestically, crude, floating storage is starting to tick up a little bit. I noticed on Bloomberg this morning. So all signs point bearish, and so if you're going to get in, and specifically for that EMP. Contract that XOP contract, it's going to flip that to the bear side. I think when we look at the commitment of traders, I don't actually have it pulled up here, so I'm just going to kill some time till we can. Hedge funds don't trade crude oil well. Just remember that. Hedge funds, and to give you an idea, they loaded. This is for last week. They're long. They're long always, but they're 420,000 contracts versus 93 on the long versus short side. They added about 1,000 contracts on the long side and added some shorts. But when you see longs and shorts added in the same week, that means they're just setting up hedge positions. That means they're just layering their hedging positions. Swaps got out heavy on the short side, which makes sense. Why would you enter into a swap right now when it's so cheap to hedge crude oil right now? So swap dealers saw a huge drop in the short side. Wouldn't recommend that. But guys, if you are interested in hedging, call friends at Aegis Energy, please. They're going to get you into something that's really, really nice, help you out. On the oil and gas news side, Stu, what do you have on the international news desk for us?
Well, we got a very busy weekend, and one of the stories was Tesla was announcing that they are opening a battery recycle for their cars in China. And that is got a lot of things to think about when you talk about true power, uh, how you price this out. Think about it. The number that just kind of got me on this one is they're going to ship all these Tesla batteries over to China to either rebuild, renew, or
Yep.
recycle. And so Tesla produced 82,000 vehicles in the fall. Um, and the batteries, oh, shoot, I had a number here. The number of lithium batteries is phenomenal.
Yeah.
I think it's great. Now let's tie it back to our California discussion just a few minutes ago. They're
Oil's at
also
$36 right now, 36.98.
oh,
Sorry, I just
let's have a moment of silence for oil price.
yeah, no kidding.
Um,
All right, we'll get over that. Continue. Sorry.
so when you take a look at the Tesla, there's like 40 different models of different electrical cars in California, and those they're asking not to charge at night. So when you charge it, do you charge it when you go to work and there's no charging station and you can't get to work? Anyway, Tesla, you got to hand it to them. They're taking recharging in their own hand, but shipping all this stuff is going to use a lot of fossil fuels. So moving on from China and our stops around the world, we're off to Canada, and Canada is got 4 LNG manufacturing terminals, and they are looking at 2 more. They are the United States and Canada are the
Mhm.
2 largest LNG countries in the world right now that are building LNG. They believe in LNG. U.S. believes in LNG, and the rest of the world cannot keep up with our percentage that we're building. So we're now going back to the Mediterranean, and this weekend, hey, put your tray table up and don't get airsick on me here.
Okay, I'm strapping in.
Chevron's purchase of Noble, we've really talked about that.
Yep.
The Noble is fantastic. Just had an article put out by Joshua Kernanza from Tel Aviv Notes. Outstanding summary on our oil and gas 360. I highly recommend going through the entire uh, process, what it means. This is going to be kicking off LNG, but it's also showing we got some turf wars going on between Turkey, Cyprus, Egypt, and Israel. Israel's becoming a natural gas leader export. It's a crazy situation over there, all about LNG. And rather than take up any more time, I highly recommend people read this article. We are now going off to the rest of the world. So we went from China to, anyway, we're now on the rest of the world. Take a look at the super majors, and the super majors are investing billions between friends on the downstream plastics. Plastic market is
Yeah.
looking at still doubling, and so look at where the money flows, and that is the super majors are investing in plastics. So
Why is that? Do you have any inclination why?
yes, the volume of plastics, they are the green, and I agree with trying to get rid of single use plastics. However, we're too lazy as a world to do that. So there's still money to be made in oil in plastics. And if you take a look at packaging, um, 146 million metric tons per year is in packaging. So China is putting out and saying all of their packaging has to be recyclable. Okay, I think that's fantastic. Um, and so building construction in plastics is 65 metric tons per year. A lot of that, a good chunk of that is wind farm material that is not recyclable. So, oil companies still can make a lot of money, and they're morphing. They're morphing into
Yeah.
all these other ones.
Yeah.
They can make money. It's still going to, Michael, it's still oil and gas. It's still fossil fuels. In fact, one of the articles that I posted up this weekend was on the Canadian thing. A lady says, "Hey, I'm here at this convention and I thought I was going to a green discussion. It turns out to be, it was a natural gas discussion, and she was all miffed in the interview." So people are talking about natural gas as green, and they're all doing this slight hand of foot, like a politician.
Yeah, no, I mentioned that to my parents this week, and I was like, watch the sleight of hand that's going on. Just watch it.
It's
And so
crazy.
there, it's crazy what's happening. Yeah, I mean, you're more well versed in this stuff than you, so I'm gonna go ahead and lean on you. In terms of U.S. shale E&P news, man, it's Labor Day weekend. It nothing, Stu. Nobody. I mean, I think there's at least one weekend nobody worked. All them execs were up at their Vail retreats,
Right,
just trying to
right.
lay low.
Absolutely. But Rystad put out a
Of course,
U.S.
Rystad put something out.
Oh yeah, it's on our site, and they go through and take a look at the ducks and the duck impact into drilling into the shale. And we both know that the nationwide duck inventory reached a peak about 5,800 before the decline in July. And now you're seeing, started from frac operations, is just now starting to increase. And on their chart, it looks like the ducks have hit bottom for being shut in, which is great news. They're going to start bringing those back online. Good report from Rystad.
Yeah, and you know, I'm gonna, I'll argue with them a little bit on the importance of what ducks means to some of this production. I think you're going to see these ducks continue to stay there. I mean, it's only 70. It's still. I think fracking, the cost of. I don't think you're going to see a lot of these ducks just get pumped or get turned on as we think.
Okay.
That's where I'm going to split from the experts on this one.
Okay. Can I drive you nuts?
Sure.
What is our favorite non-gap mean to everybody? It means you can hide stuff in it from
Yeah.
an accounting perspective. Duck is the same thing. If it quacks, it's a duck. If it's a duck, you have different stages of duck. There's not a duck one, duck two, duck three. A duck means it could have been drilled 10 feet to hold the lease. It doesn't mean that it's ready to be turned back on. So I agree with you on this. There's no delineation between duckage.
And this is the expense, and the expense that a drilled but uncompleted well. I mean, completion cost is 75% of your cost. So great, you've done 25% of it. And I always love, we're gonna save drills and uncompleted for another podcast because we're already 30 minutes in. I think that's everything, Stu. I mean, it's Labor Day weekend. Last thing you want to hear me do is continue to go off about random stuff. Markets just opened here at 7:30. Everything's down. S&P's down about 70 points. Nasdaq's off highs, down about to 11. Down. Tech continues to sell off. So check out, guys, the Oil and Gas 360 News Desk. All of your energy market finance stuff with that, guys. We're gonna go and let you get out of here. Get back to and start your day. Thank you for checking out the 360 Digital Closing Bell and the Oil and Gas Show on Apple iTunes, Spotify, YouTube, wherever you get your podcast. Subscribe, unsubscribe, resubscribe, do whatever makes the algorithms go nuts. Really appreciate it. We will see you guys this afternoon for the Digital Ticker.